Good evening, everybody. So we're doing this live for the first time on YouTube because a lot of people have not had the opportunity always to sit in on the Zoom calls. How's it, Mike? How are you doing? And what we're going to do is we're going to go through a process tonight that most traders forget. When they wake up in the morning, they want to go and sit in front of the screen and see what they can buy, but they don't do anything that's really fundamentally right. And maybe you do something that's right, but you don't follow through. You don't do the process. You don't go through the process of because of what your strategy is. So I'm going to do a little introduction of myself for those who have gotten the link or follow the channel, and just to give you background. Hi, Carol, Hans, Mr. Faree. Is it Mr. Faree? Yeah. What I'm going to talk about tonight, and I might have to mention it more than once, is that anything I discuss here is not financial advice. Okay, so everybody takes responsibility for themselves. Financial advice comes from financial advisors, and normally most financial advisors I know work for a company that try and sell you the policies of that company. There are real financial advisors, though, that understand the different assets that are in the market and which ones to trade. And knowing which ones to trade is actually exciting. It's fundamentally exciting. So we started our business 6 years ago, and we started teaching ourselves to trade. My wife wasn't such a keen trader as what I myself is, and then after learning to trade, I went and started classes, basic trading classes. If I think what I know then versus what I know now, it's and the amount of information I gave to people then, and they still made money. That's crazy. But we get better in time, or with time, if we decide we want to keep on advancing our knowledge. So I wouldn't ever call myself an expert, because an expert always finds out when the next mistake comes, they realize they're not an expert. There's always a better way to do something, or more clever way to do something. And also another thing is, if a real trader never gives up. Doesn't matter how much money you lose in the market. And folks, if possible, please take notes, because if you don't take notes, that means you might want to go all the way. I don't mind if you go watching the video again, but take notes as we go, because while it's fresh in your mind, there is lots of good information. And what I want to suggest is, when you take notes, don't go and take notes verbatim what I'm saying. Yes, do that. But not just verbatim, but make side notes to your notes. In other words, if something hits home, if something makes sense to you, then write it down, and then make a little line or little dash or little arrow and say something there next to that you can change with your trading style or what you've been doing wrong. So make extra notes on because everyone has a different style. So if you don't agree with my style, because we teach different styles. We teach scalp, day trading, swing trading, position trading. In fact, we don't spend much time teaching position trading, because people are making, most people aren't position traders. They think they're investors, they're not investors. All right. So tonight is our first session in preparation for what is to come for the next 2 weeks. So we're doing 10 days of training. trading, live trading together with our team, for those who want to be part of our team for these sessions. And why do we do this? We normally do this either the end of the month when the markets do these little ups and downs, or we do it in seasons where the markets go wild. And not necessarily just bear runs, we do bull runs also. And most traders feel like they just need to be in the bull runs all the time and not the bear runs. But big traders like Warren Buffett, they're looking for bear markets also so that they can buy in the dips. All right, so what we're going to do is we're going to go through some of we've got 2 hours. So if you don't have 2 hours, you might miss some of the stuff that's happening. That's okay. Hopefully by some other time you can finish watching this, because trading is like putting a nail in the wall. There's preparation that takes place. So if you want to put a picture on the wall, it takes time to go and find a drilling machine, put the right drill bit in, measure the distance from the ground to the top where you want it. Got second, third opinions, because you can't put it up unless somebody is approving that's where they want to see it. So putting the picture on the wall is the easy part. Placing a trade is the easy part. But exiting the trade, or the fundamentals of where do you want to go with this trade, is possibly the most difficult thing for most traders. And so when I talk about mistakes tonight, I'm going to mention mistakes that other traders are making, and I'm going to mention the mistakes I'm also making, so that all of you can know that I'm just part of the crowd. I'm just there like you. I'm your coach. I'm not walking behind you with a cattle prodder. I'm showing you the way. Right. So 95% of all traders are losing most of their trades or most of their money on a regular basis. And the reason why they're doing that is because they are doing okay. They are making money for 2, 3, 4 days in a row, and then they start losing money. Then after 2, 3 days later, they start making their money back again. Then they start losing their money. Then they start making their money. And when they start making money and the markets carry on going up, they start doing more stupid things by putting more money into the market and not keeping, not exiting their trades when they should. And then they start losing bigger money. So it's like gambling. I mean, most people have in their life done some kind of gambling, even if it's getting married to the wrong person. And then you want to blame the person because they turned out a disaster. No, it's your choices that you made to get to that point. You didn't do your research. You didn't do your homework. So, good evening to John, Johan, Paul, and my friend Brad, Sol, Debbie, Hans, everybody, Carol. We want to go through a process, a step-by-step process, because when we start our trades tonight and we carry on for the next 2 weeks, we are going to be totally focused on our trades, and we will be able to zoom in on the personalities of these coins, because this is what I did when I was a full-time pastor. I used to write down everyone's birthdays and when they had a bad day, and when they had very bad days, so that whenever I'm dealing with this person, I know one of my family members, elderly person, recently had a bad day, and then the next day they had a bad day, and then 4 or 5 days later they had a bad day. So I said, I need to document this. I need to put this on my board. And I discussed this with my wife, so she's also in agreement with this. Because what is the difference between a bad day or bad mood or a bear run? What is the difference? So this is what you get. You meet this person, and you start. You start with a rocky start. You're not sure if they like you, and sometimes it doesn't look like they like you. So there's a bear run, and eventually you get to like that. We get to like you, and everything starts going well, and you start looking. And they start answering your messages every day, and there's a bull run, and you feel like a bull, and then you forget to text them back, and then they phone you and they say, why are you not answering my messages? And then there's a bear run, and the price goes down, your shares go down. And then so is life. This is happening. It's not just happening on the markets, it's happening to all of us all the time in our relationships. And that is probably the scariest kind of thing, because we're not really taking notice of what we should. Now, when we analyze coins, when we look at a coin, and that's the very first thing we're going to start off with, because there are so many coins. If you're trading on Altcoin Trader, there are like 20, 25, 26 coins to trade, and they bring in another coin on board called Matic coin. Matic there's lots of excellent news. I couldn't be on the Altcoin Trader call last night, but there's some excellent news coming on Matic, and they believe that Matic is probably only worth 5 or 10% of its value. So there's a free tip for you folks, where it's going. So what we want to do is we want to filter out 400 coins on Binance. The guys that are making money on Altcoin Trader are making money because they only focus on 1 or 2 coins. Whereas if you're on Binance, then you're just like a guy that is starting to date for the first time, or a girl that's starting to date for the first time, and they can't stick to one partner because every day they meet somebody else. They're all over the show, and they're trying to date everybody. They're trying to do what they want to do. And that's what you like probably with your coins when you want to trade. So we will start our day with checking, besides the calendar, checking the calendar. And what we do is our basic month calendar, we send to the traders in advance. So if you're on one of our signals, from signals 2, 3, signals 3 groups and higher, you're going to get the calendar, and you're going to know, okay, this is what we expect for the month. You're going to expect this from Bitcoin based on algorithms that we run in the market. We're going to expect the moon phases, full moon, new moon, first quarter, last quarter. We're going to look at the Chinese calendar. We're going to look at when the Jewish holidays, Muslim holidays, all of those things need to come into account. The other day, we were expecting a bearishness in the market, but then we saw there was a vital holiday on the Muslim calendar that we hadn't taken into consideration, and boom, the markets just dropped that day. But it was on time, on par for the time that the Bitcoin price normally drops in a month. Now, Bitcoin has had a rocky time, but there's certain times of the month that we expect it to drop. It's virtually guaranteed. There's only twice a month that we actually expect that the price could go up, and generally it does. And generally it takes other coins with it. So we are going towards the last quarter moon now, from full moon. Full moon, we saw some good bullishness on the full moon and after, and it's exciting. But knowledge is power. So before we go and look at 20 different coins, because what happens is, on your calendar that you get for the month, you'll see this next month's calendar. You will see the projections of different coin launches or news that's going to happen certain times during August. So during that time in August, we will expect some bullishness on those coins. There's no guarantees, folks. There's no guarantees, but we'd see 95% of the time we can make money on those coins. So we can prepare ourselves. But I'm not going to trust that the price is just going to go up. If I look today and I see tomorrow there's this coin that's having a launch, like Ethereum or Matic or something like that. If I go and I see if this coin is going to launch, but I want to watch if the Bitcoin price coming down. Because if the Bitcoin's price is coming down, doesn't matter what this coin's launch is going to do, it's going to go down with Bitcoin. But then somewhere along the line, we'll see a turn and go higher. So what traders forget is if you want to be one of the 95% of traders, and 95% of traders are losing money, then get in at current price. Always get in at current price, the easiest way to lose money. If you can plan your trade so that you don't get in at current price, that you can find other levels lower to buy, provided that you have a good idea it's going to go up, great, then we're going to do that. And of course, some coins have their trends. So there's a lot of people teaching cryptocurrencies out there. I've been in the market for 6 years, and I'm totally unconventional. Those of you who know me, I'm the most unconventional trader. So if you ask me about all the hundreds of technical terms and stuff, I hardly use technical terms with my traders because most of the people that I teach have not got even proper English background. And so we use much more simple language so that they can all understand and make less mistakes also. So every teacher out there believes they have a magic potion, and a lot of teachers, there's a lot of good teachers. I've done some courses with good traders, and some of them are stock market traders that have taught me stuff. But because of the unconventional way I've taught people, we can expect that as much as you're going to make money in the markets, there are days when the markets are going to drop. If you can know which days the markets are going to drop, then you are prepared. Today is the 27th. Today we've seen some good trades. But tomorrow, I believe that the Chinese call it Destruction Day. Tomorrow we will see some bearishness in the market, but we might see some bullishness also. We might see both. So we prepare ourselves by using normal technical analysis that we normally use. Now, when we look at the coins for today, we saw that if we can take the rumor coins, rumor, you buy on the rumor, you sell on the news. Today's news was the graph and secret. So if you want to go and see, did these coins and Wax and Carver. Now, all of us know how well Carver did yesterday. So there was the news, the rumor, and today was the news, and it's run out of steam. So you want to buy on the rumor, sell on the news. So you want to be careful about, just jumping in. Make sure you're not jumping in on the day. And if today's news of Carver there's no more announcements for the rest of the week, we might see a drop for the rest of the week. I'm now referring to scalp and day traders. So what we're going to be spending time in the next 2 weeks doing is scalping and day trading. We'll be combining the two. So none of what I'm talking about is like buying Bitcoin. Buy Bitcoin. Hold it until September. Sell it in September when the prices drop. Buy it in October when the prices go up. Sell it in December. Now, what I've just told you could be actually the reality, because the stock market might crash in the next month and a half. But we don't want to be worried about the noise in the world. I don't want to worry about all the noise in the world. What I'm worried about is, where is the down turning, going up? Where's this place to sell? It's going down. And then I make sure that I'm in a coin that's not just going to make me 1% every time it turns. I want to be making sure that I can take nice profit in the markets. The next coin today, Origin. Origin is OGN. So we might be taking a look at Origin later. And let's see what's tomorrow. Okay, there's another announcement. Carver swap testnet launch tomorrow. So that's we can still keep an eye on cover as a possibility to trade. And there's a news on an exchange that's listing Dogecoin. So there might be a little bull run on Dogecoin. I'm not trusting Dogecoin too much because it's not been the most faithful in trading space for regular bull runs. As a day trader, scalp trader, I'm looking for regular bull runs. If I've sold a coin and it's dropping and dropping and dropping and it's going sideways for weeks and months, I'm wasting my time. That's how a day trader and a scalp trader looks at it. The next one is Ziliqua. ZIL has a huge potential because a lot of blockchains and blockchain space is going to be built on ZIL in the near future. So that's going to be exciting. Then there's Injective Protocol Celer, CELER. That's tomorrow. So we've got some nice coins to look at tonight before we start trading tonight. So to see, are these coins now still idling, ready to run, warm the engines up, or have they already hit a high? You don't want to just buy because you read some rumor to buy the coin. You want to do some proper technical analysis on it also. So hopefully I'm not talking, must I talk slower? Am I going too fast? Because I know it can go off the hook sometimes. So we start with Bitcoin always. Bitcoin is our starting point. So let's see if I can get to share my screen. All right, let's maybe I'm on the wrong screen. So while I'm busy trying to figure this out, let's go on to the next point. So a preparation is everything. And what we've done sometimes, the traders, is we've done these little Excel spreadsheet graphs where you take a coin and you say which times of the month does this go, hit a low or hit a high, and from there you can actually go to the next level or the next step by saying, all right, what we're doing now is we can figure out to stay in a coin. You wouldn't stay in any coin more than 14 days a month, more half the month, because what you're doing is the price goes up to a certain level and you're making money, and then you keep on holding that coin because you think it's going to go further up. It's like you've gone on this first date and this person that you've dated has given you all the signs. They even kissed you goodnight. And that is a mistake that you're making. Because why? Because you don't know what the next date is like. You're judging on the like 5 minutes or 10 minutes or an hour or two of what you would have put your best foot forward. So the idea is to know which days to get in and which days to get out. Because if you are, I'm not talking about Bitcoin now. What I'm suggesting, we used to, up until last week, we told the guys, trade all your coins to US dollar tether. And when when you trade it to US dollar Tether, then you trade into a stable coin. When you trade into Bitcoin and Bitcoin is all over the place, you might be losing some profit. So what we've done is we say, all right, now we know that Bitcoin is bullish. So Bitcoin will make, and remember, this is not financial advice. This is not telling you this is what you must do. My feeling says that we are going into bullish territory now. So bullish territory means that I'm in a situation where I'm, even if Bitcoin takes a dip, I'm still positive about the price being going up, and that's to me the most important thing. The price going back up, right? So that means that all the cryptocurrencies should be going back up. So what we've done is we've done a little algorithm a little while ago, last month, on this month, and this month shows that today should have been a good high, but then tomorrow and Thursday the prices will drop again, and then Friday, Saturday, it will be going up again. So that doesn't mean because our algorithm says that it will do that, it will do that. It's generally just an indication of what we feel that will happen, and that what we feel will happen is actually often what happens. So we don't want to bank our money on it, but yes, right. Anything you guys want to discuss or ask at this point of time while we trying to get this screen shared? Ah, that's very clever. Now, where's YouTube when you need them? All right, let me just see. Has anyone used this before? It's the first time I'm looking to do this. The stock market will crash when it crashes, and it doesn't just crash like overnight. I want to actually show you on my whiteboard just now what it actually does when it doesn't crash immediately. It probably takes around a week or two of extreme panicking and worrying and bad news, and then it takes one proper set of bad news to make it crash altogether. So that's unfortunately the way the cookie crumbles. But we know that we have to look at around the 8th of September when the Jewish Shemitah year starts. That's when we start looking at the possibilities. And what will cryptocurrency crash? What I'm seeing with cryptocurrency is that it's had its correction. It's had its proper correction already, and that's why it should be going up. In the next while. But then it will also take a dip. I've seen every time the stock market crashes, look, it's not been around for a long time. Crypto has not been around as long as the cryptocurrency markets, but it's been around. And what's exciting is that it reacts the same as gold and silver, but after the crash, it has a huge recovery. So we might have the crypto markets until November, December going bullish. Then we want to get out into our US dollars or USDT or USDC or ZAR and then buy in the dip when the dip happens. That doesn't mean that there won't be opportunities in the crypto market. There will always be 5% or less than 5% of all the coins in the markets that will actually do its thing. And with that being said, it's a very dangerous time. So what we normally do in that time is, if we don't find any coins that are still going up, we like to buy in the dip. So when Bitcoin comes falling down and we find a place where there's a dip, we buy in the dip and we sell 3 or 5% higher, and we buy in the next dip. And so we buy and sell in the dips. We use then the Bollinger Bands for the actual determining between the Bollinger Bands and the RSI. So since I have not been able to see that, what I'm going to do is I'm going to log a quick Zoom call where you folks can join, and we will carry on with the Zoom call as the rest of this presentation. So let me go to meetings, and I'll post the link in the group, and then you guys can just join us on that Zoom call when you're done. Okay, there's too many words. So it only allows you a certain amount of letters or words in this. Great, I've just sent you folks the link, and I'm going to start the call so long, and I'll see you on that link. I'm sorry about this, but I thought it was easy, but somehow I'm missing a picture over here. So we'll see you on the call. Just log in on the Zoom, and we'll see you there.